What's up, YouTube fam? In this video, we're gonna finally get to see a look at all the things I've been talking about and why rolling is so valuable. So this is some live trading, and listen, I'm not taking entries or closing positions on the video, but I am in positions, right? So that's still live trading. Trading is just as much about what you do during a trade, right, as much as it is actually executing, because there's plenty of options where I could have easily panicked out of either of these. There's still opportunity to do that, right? Like if I don't decide to hold and I just get out now and just cut my losses, because it's been a long position, right? It's been a long fight. But the point is that you have to consider trading to be a lot more than just the entry and the execution, right? Clicking the button is actually just a couple seconds. It's everything else that really matters. It's what you do before the trade, what you do during, and then what you do after. So with that being said, this is really a live look at why rolling is so valuable, right? Because we're up 1,200 for the day. And if you have been following this account, or this channel, if you've been selling options, you know that a $1,200 a day selling options is not easy to do with this account size. But the reason why we were able to do it is because, as you see, the individual cash in the account is 26.4. So what that means is that with rolling, we're able to utilize a lot more buying power than had we closed the position ourselves and taken new ones. And that's a big difference, right? That's a big thing to consider. As you see, right, the collateral we're putting up here is for 20,000. For this is for 25.5. Obviously, there's only 22 here. So if we close these, flat these positions out, we would only be able to use 22. So that's why rolling and holding on to positions is so valuable and so crucial in selling options, because it's a great way to save a position. Now, in this case, I do believe if I was to close this right now, I actually would be profitable on this position. In terms of this one, obviously this is the one that we've been in for a long time. So even though it says our total return is $100, we're actually still basically down this amount, right? Because we rolled in order to save all of the money that we had lost. And ultimately, the way we're going to recoup that is when this loses its value, right? So everything this loses, right? When this becomes worth $100 instead of 4,000, at that point we will be at 26K in this account. So yeah, man, that's it. That's the real live look. That's just an understanding in terms of why rolling is so valuable, right? We were originally in this position at a 55 strike, and since we were able to roll, we were able to get down from 55 all the way to 50, right? So here you see it. The key to rolling, right, is as long as this is more expensive than this, you'll always get a credit, right? So as long as the new position is a higher premium than the old position, right? So if we go and look at what we can do with rolling this one right now, and this is not me saying I'm going to roll it, right? But we're already in the January 17th, so we'd want to go into a later date, right? You're always going to want to roll out. And at this point, I can roll it all the way to 45 and get a credit. So I can roll this from 50 to 45 if I really wanted to. And that's because since things are going up today and these are all losing value, I could even go all the way to 44. Now, if Con-L was to fall back down, then I would only be able to roll roughly to 47, 48. So that's the thing. Rolling on a day like today actually does make more sense. Now, I'm still going to wait because we have a lot of time, right? We have a lot of time from now until January 17th. And ultimately, the cheaper our current position gets, the better it is for us. So that's why rolling later a lot of times makes more sense if you're going to roll it all, is because the closer you are to expiration, the more likely the premium has no value, right? And obviously, when does it have no value? When it's at the money or out of the money and it's closer to expiration. So the closer it gets to expiration usually makes the better rolling opportunities. However, on a day like today, it's not a bad decision to try to roll, right, and lower what would be your strike. But at the same time, something like Con-L, which, if let's just say Bitcoin does continue, which not for nothing, I think it was either yesterday's video or the day before that I did call for Bitcoin looking extremely bullish, just because it was holding this demand. I have the market cipher indicator that I like to use that was showing, let me just remove this. It was showing a lot of bullishness just on this, on basically every single time frame, right? So I don't really love indicators. I'm more of a supply and demand trader. Again, I wouldn't even consider myself much of that. I really just, I just look for the obvious trend and then look for the obvious zones. And I'm not going to sit here and say anything's obvious, right? Like I didn't see this happen. In the end of the day, the market is trying to outsmart all of us, and that's why we sell options, right? If you thought you could outsmart the market, you'd probably be more interested in buying options. But since you're more realistic and you want to actually make money instead of lose money, that's why you would sell options, right? Because let's be real, if you bought options, in the entry levels that we did in these positions, they'd be worthless right now, right? Like if you were wrong, then you'd be done, okay? And in selling options, it gives you this cushion where you can be wrong and still make tons of money, right? So those are the positions. That's the live look at rolling. Ideally, right, this uptrend continues. That's what I wanted to say. And at that point, these premiums will go worthless very fast. And that's the thing, I never started panicking with these positions. It's very important to not panic, especially when you're going to have the ability to roll your entry lower. But it's very important to not panic because, the market, you have to think about it like this, right? Like people that buy puts, generally speaking, do lose majority of the time. So if you're selling puts, you're on the side that should win majority of the time. So if you're losing for a while, it has to eventually turn around just due to the fact that it can't be that easy for the people buying puts, right? Now, there will always be those opportunities. Obviously, this whole trend down, you could have gotten extremely wealthy buying puts, but to try to time that and try to be that much better or smarter than the market, to me, I just don't think that's sustainable for the average person. I think what is sustainable, listen, this was obviously risky, taking MSTX, taking Connell. These are obviously risky endeavors, but ultimately the fact that you can keep buying time while also, you're not necessarily hoping for it to bounce as much as you're hoping for the puts to die, right? So you're rolling down and then hoping that these puts can lose enough value where you can get out for either a small loss, a break even, or a win. Ultimately, that's a calculated risk. That's a bet that I'm interested in taking. Now, again, my only regrets towards either of these positions was the lack of, allocation, the lack of, not putting all of my money into one account, diversification, right? So I don't have regrets in terms of the position. I'm not sitting here saying I'm trying to be this perfect trader, right? I'm just trying to do what I think is best to get the biggest return possible. So that's all. I think that rolling is extremely helpful. I hope this video was helpful to you and made you see live just what I'm talking about. If you have any questions, make sure to leave comments. I'm happy to answer all of them. Make sure to subscribe for more content, and I'll see you guys in the next video.